It's time for Stock Picks. Today we are looking across the tech sector with Uber, Naspers and Halozyme Therapeutics. And joining us in studio with his take on these counters is Seleho Tsatsi from Anchor Capital. Seleho, thanks so much for your time this afternoon. Let's start off with your first pick. Let's start with Uber. Looking at its recent results, revenue topping analyst expectations. The group also launched a buyback and the share price has been ticking higher. Walk me through your analysis of that counter and why it's one of your stock picks this afternoon.
Yes, so I think with Uber, one of the interesting things about it is that most of us, probably the viewers at home, all of us in studio, we've tried their service at some point, right? We've gone from A to B with their ride sharing, or we've had something delivered with Uber Eats. So we're quite familiar with the service or the product at this stage. And I think it's reached a point where it's reached ubiquity in the sense of it's almost a verb in everyday language. You know, you might say to someone, hey, I'm going to Uber to you, or I'm going to Uber you some food later if you're not feeling well. So that's the first point. It's a small point, but I think an important one. It's very difficult for a company to attain that sort of status in everyday language. But what we really like about the business and what attracted us to it was the improving operational metrics. So last year alone, they generated nearly $7 billion in free cash flow, really an astounding number. And they're doing that whilst their margins are improving very strongly. Operating margins now about 12%. It was 6% in the full year for 2024. And they're investing very aggressively back into the business. So all the kinds of things that you want to see in a technology company.
And I mean, I was going to say that Uber is also one of, the top performers in the category it operates in. When you talk about even just talking about Uber in our everyday lives, people even refer to Ubering using other apps,
Yes, yeah, which I think is a great testament to the fact that they've kind of led the way in that ride-sharing category. Great point, yeah.
What do you think about its ability to turn into a super app? There's been talk around this and whether it is able to, kind of attain that status and follow some of the apps we've been seeing out in India, some of the apps we've been seeing out in China.
Yeah, I think it's something that they are working towards. I think we see it a little bit less in SA, but for example, in the UK, in London, you can go on the Uber app and you can order an electric bike and scoot around London.
Yes.
And they also make it easy to see what public transport is available. So it's not just for ordering Uber rides, but it's for getting around the city. And I think that's true for many places in the West. So I think they're definitely not there, but you can see that they're working towards that.
And I also wonder with, it's a geographical footprint, how it's been able to navigate regulation.
Yes, so I think well, he's not new anymore, but the current CEO, Dara, who was previously at Expedia before Uber, I'm not going to attempt to pronounce his last name because I always butcher it unintentionally, but I think he's done a fantastic job in obviously not just improving the operational metrics, but also the culture of the company. Before he came in, Uber had a reputation for perhaps being a little bit too hard in terms of their elbows and being willing to skirt regulations, whereas he's come in and tried to do things more by the book. And I think that you've seen that in their improving relations with regulators.
Yes. I mean, maybe 4 or 5 years ago, you would see Uber sort of exiting markets it couldn't necessarily operate in. And that's changed over the past few years. So you're right on that. Before we move on to our next pick, I want to talk about the selfless driving offer, right? This has been a big theme in the US in particular. Now we are seeing Uber partnering up with a German partner as it prepares to launch that, service in that market.
Yes, this is one of the central points to the investment thesis. So one of our views is that Uber was trading cheaply and still continues to trade relatively cheaply because there are concerns about what self-driving vehicles or fully self-driving vehicles are going to do to its market. And really what they are trying to do is they're trying to take a platform approach. So they're trying to be the platform, similar to what they've done with Uber Eats, but for driverless cars.
Okay.
So if you think about, for example, McDonald's, obviously McDonald's has its own app and it's fantastic, I'm sure. But most people, I think, are generally going to use an Uber Eats app or some other aggregator app for restaurants. And so Uber's trying to do something similar with the driverless market, the driverless vehicle market, where they're going to have their own aggregation app where you can get a variety of different driverless offerings rather than downloading from, let's say, Waymo, Tesla, from everyone. Yeah, they're trying to take that platform approach.
All right, let's move on from a brand we know to one we don't necessarily know as much. I'm not too familiar with it, and I guess let's start there. What this company actually does, that's Halozyme Therapeutics. It's in the pharma space, but what does it actually do?
Yes, so like you said, it's not the most well-known company, but their operational performance has been really fantastic. In terms of what they do, we can think of Halozyme as being a royalty business,
Okay.
and that's probably the best way to describe it. So really, Halozyme earns a royalty on every sale of a pharmaceutical drug that uses its technology.
Okay.
Yes, and its technology is drug delivery technology that makes it easier for drugs to be delivered subcutaneously or basically under the skin. So rather than intravenous, where it goes directly into the vein, they provide technology that makes it easier for drugs to be delivered under the skin, subcutaneously. Now, because of that royalty aspect to the business, it's exceptionally profitable, almost mind-blowingly profitable. So in the last quarter, in Q2 of 2025, their operating margin was above 60%. 6-0, so phenomenally profitable. But what's also interesting is it's growing very quickly. So from 2024 to 2028, they anticipate that they are going to roughly double their earnings base. And this year alone, in Q1 and then again in Q2, they raised their guidance consecutively.
And quickly before I move on to Naspers, how much of the market does it hold? Because I can imagine that it's one of the only companies that does what it does.
Yes, so they love to make the point that they are really the pioneer in this subcutaneous space. There are some competitors, but they're really smaller and more startups, if I can put it that way. Yeah.
All right, let's get into your last pick, then Naspers. Let's get the rundown on why you like that company. I mean, a JSE heavyweight, one that everyone really likes, but can they afford it? That's the question.
Yes, yeah. So I'm cheating a little bit by choosing them because I think on my last two visits I chose Tencent and Prosus. So I know we're not supposed to choose the same thing twice, so yeah. I kind of snuck it in there. And really the motivation for choosing Naspers is we continue to think that Tencent, which obviously is the big driver of NAV and the share, we think that Tencent continues to look attractive. Tencent itself has had a really fantastic 2025. The share's up, over 50% plus in US dollars. It's obviously not as attractive as it was during the depths of the regulatory crackdown in China.
Yeah.
So we do acknowledge that, but even after this big run, it's on a forward PE of about 19 times. So it's nowhere near exorbitant, we would say, and growth continues to be quite attractive.
And what have you made then of Naspers Process's efforts to show investors that there's more value in the company besides Tencent?
Yes, I love the Prosus CEO, I think, in his last, at the Capital Markets Day, had a slide where he was saying Prosus is not Tencent minus, something, expenses, head office costs, etc. But we should really think of Prosus and Naspers as Tencent plus. So they're going to add to the performance of Tencent. And I think we're starting to see that this year, where they have announced 2 large deals over the last 12 months or so, an online travel agency in South America and Just Eat's Takeaway in Europe. But they've really said that from now on they're going to be looking to bed those 2 down, and it's really about operational performance. And they're looking to be, in terms of Prosus, they're looking to be a European tech champion because, as we know, there aren't as many large European tech champions as there are American.
All right, let's leave it there, Seleho. Thanks so much for your time and sharing your insights on those 3 counters. Now, that was Seleho Tsatsi from Anchor Capital.